Hello everyone, wait a little bit here for some people to file in. We're going to look at Bitcoin, Ethereum, Ripple, most of the major names. Not going to stay on too long, got a course to work on. Action-packed Saturday night, course slide creation. We'll call it, let's say 2 minutes we'll go live. I should have prepared a song or something. So everybody wants to know, is this capitulation? Everybody's looking for capitulation to mark the bottom, as they should be at this point after the bear break. As soon as we bear broke the weekly equilibrium bearish, that's when we say, all right, in order to change this trend, it's not going to be this slow grind and then, curved bottom. It's going to be an all-out dump. And it's pretty much the exact opposite of what we saw at the all-time highs. Remember how quick we got to the all-time highs that last week of action? Really, it was the last 2 weeks to the upside where we went pretty much 100% in 2 weeks. And then the week that marked the top, we gave it all back 50%. So that's what marks capitulation. A final huge push of 100% in 2 weeks, and then a 50% drop a week later. In my opinion, the bottom for Bitcoin is going to be marked by a huge push to the downside, and you have to have the V-shaped recovery back to the upside so that when we hit the actual bottom of this pullback, it's only going to be there for, 5-10 minutes. It's not like we're going to bounce around a level for a while, establish a support, and then take off. It's going to be a V-shaped dump. And at this point, the bulls are pretty close to pulling off a V-shaped dump just now, and the bears regained themselves, and they reestablished composure here. And what I mean by that is we look at the shorts, and the shorts are absolutely through the roof right now, 3 hours in a row. They're getting a little bit cocky, especially, the last hour where they're continuing to add down here. And it's also driving up borrow rates, so they're ending up having to pay a pretty penny for these short positions. But we saw Bitcoin here on Coinbase. This 5-minute candlestick, we rejected from 4,000. Had we broken 4,000 and then saw some follow through, that would have been the capitulation kind of move. It would have trapped shorts. We would have then had a bit of a short squeeze. But because we rejected, and just like that, 15 minutes later, pulled back $200, the bears don't have anything to worry about. If we do not see this pullback and do not allow shorts to cover, that's when panic starts for the bears and when they do see a short squeeze event. So again, we got close. We saw a 10% bounce, just about 10%, a little bit less, maybe 8% in 25 minutes, but we're giving it all back. So have to see the follow through and the volume behind it, and we don't have that at this point. So we're still going to be watching, just as always, the exponential resistances. We have the hourly exponential resistance. The 15-minute exponential resistance is currently rejecting the price. So at this point, I have entered a couple positions. I did scale in 38.11, 37.11, all the way down. I still have some orders that I'll probably drop down another leg in the 35s, 34s. But at this point, with my position, I'm pretty much break even where we sit right now. So I'm going to let things tighten up a little bit. I expect a 15-minute higher low to form and an equilibrium on this 15-minute time frame. It's also worth noting that Bitcoin on Bitfinex did not see as significant of a bull move, meaning the bears were not as close to getting trapped as they were on Coinbase. And we see the price got up to 3,900. The prices are different here. Actually, this is Bitstamp. Let's look at Bitfinex, where we're seeing this chart of all these shorts. And we can see this 15-minute candlestick. We made it all the way back up to this candlestick, which was the 4:45 p.m. candlestick. And here on Bitcoin, we got well above that, and we made it all the way back. That would pretty much only be like if we made it up to here on Coinbase, whereas we made it all the way back midway through the initial dump candlestick. So if Bitfinex were to have gotten that high, Bitfinex would have made its way all the way up over 4,100. So just a little bit of a comparison. The bears kept a firmer grasp. That's why they didn't panic as much, because again, all these shorts that we're looking at, which are still climbing, are on Bitfinex, and Bitfinex didn't see anything but just a 15-minute lower high. So that little panic there, that big upper wick, little panic for the bears, was only on Coinbase. And that's important to note because, again, have to see that happen on the exchange where the shorts actually are in order for that short squeeze to take place. So at this point, exponential resistance on the 15-minute time frame, tightening pattern anticipated. I don't think this is our capitulation bottom. I think that we can see further downside. At this point, the daily time frame and the weekly time frame have dumped significantly. There's no doubt about that. But we're not seeing the kind of V-shaped recovery that is needed to trap shorts and have that no look back bounce where we don't even, just like the all-time high, we didn't look back at that all-time high. Once that was hit, that was it on the weekly time frame. We hit 20,000, we dropped 50%, we made it back up, didn't even get within, 15% of that all-time high, and then it's been bears ever since, obviously. And now we are patiently waiting for the exact opposite scenario in the other direction, and we just don't have it yet. So I'm going to continue to play dumps like this and put myself in positions where, obviously if we saw the break of 4,000 and we did see a V-shaped recovery, I would be very pleased with my positions right now. Instead, I'm sitting pretty much break even, and I'll probably exit break even, small win or small loss, and then have capital to do it all again, because one of these times it will be the bottom and there'll be very significant gains to be had from that. So let's look at some of these other names. Ethereum at this point, we've dropped 50% in 2 weeks on Ethereum. That's extremely notable, obviously, for obvious reasons. And we are looking at a lack of support. After 100 psychological, the next level that we're going to be looking down at is $13. So there is zero support nearby. We could say 75.89 would be a support after 100. But again, we're just in free fall and there's no sign of any kind of climax. Even the volume is not significant at this point in order to mark that kind of climax that we're looking at. So just keep that in mind, that we really need to see prices hit for a brief period of time, a complete turnaround. Shorts have to cover, they get squeezed a bit, and we don't fade back. We don't give the bears this kind of opportunity to cover. So we could absolutely see another leg down. I'm watching psychological levels at this point, and for Bitcoin, I know a lot of people are looking at the 3,000 range because there is some price history there. And if we look back on the weekly, previous resistance and also support. So you can see we rejected from 3,000. Then once we got over it, we pretty much bounced off 3,000. And that is a target that some traders are keeping an eye on. The weekly RSI is just about oversold. Not exactly there yet, but we're under 31, just about on the verge. With one more leg down, the weekly RSI will be oversold. And let's see where Ethereum's bouncing, rejecting from the 15-minute exponential. I assume that's the case. We need a 15-minute higher low. Resistance, of course, at this point is the top of the bounce for all of these names. And let's get that level. It's 4,000 on Coinbase for Bitcoin. And you definitely have to be paying attention to which exchange you're looking at, because exchanges with Tether have different price points. So Bitfinex here got up to 4,040. Need the 15-minute higher low. And then we'll look for a lower high with continued exponential resistance and a continued tightening range. And again, the volume is not there for what we're looking for a climax. The 4-hour volume here on Bitfinex, it was higher on the initial bear break of that 6,000 level. And it was even higher just recently here, a couple days ago, when we hit that other temporary bottom. So I am not hopeful that this is the capitulation bottom just yet at this point. Traders are still keeping some cash on the sideline, still keeping an eye on these shorts, because again, the more cocky they get, the more extended we see, and the more shorts we see, that's the scenario where we look for the squeeze. So I want to see, if I'm looking for a bullish entry, I want to see these shorts up at 3,600. I want them up at all-time highs, to be completely honest, to have the highest chance of that capitulation move. XRP also got the bear break down. So again, nothing really immune to Bitcoin at this point. Everybody correlated to a certain degree. 377 breaking. There's a lack of support nearby. Not much follow through at this point, but we could very easily see continuation down because of the lack of support. 15-minute exponential resistance on the bounce, just like everybody else. Need the 15-minute higher low. Resistance at this point is 389, and support is down at 368. So at this point, hopefully you've already got a game plan established where what are you doing? What is your game plan? What's your strategy going forward? Is it accumulating orders into the dumps and holding on? Are you accumulating like what I am doing? I'm entering these orders on the flush down into oversold conditions, and I'm positioning myself to potentially nail the bottom. But if I don't nail the bottom, I'm going to exit and get my cash back so I can do it all over again. And I've already done that on Bitcoin, keeping my losses extremely small. But, the flush that we had down below 5,000, I did the same play. I tried to enter a position for the potential of a bounce following through, exited for a small loss. And again, the losses that I'm taking on these attempts are so insignificant to what a normal, trading day would be in the stock market world with a larger account for me personally. So I have no problem making these small attempts, hoping that when I eventually do get that bottom, we'll see, I expect Bitcoin to easily go 50% from its temporary bottom. And that will allow for obviously making back tiny losses. If I lose 0.5% to 1% 4-5 times, that obviously isn't going to matter once the real bottom is hit. So that's my game plan, and I'm perfectly willing to accept small losses while I continue trying to position myself. But you need to have your game plan as well, because I guarantee you some people bought the 5,000 break, used up all their cash, thought there's no way we can go lower, and here we are, down 20% plus from that point, and they have no cash to buy the dip left. So again, be cautious and patient. We have shorts that have been in positions for quite some time in our chat room that are, locking out their positions, locking in their gains. And that doesn't mean they're going bullish at this point, but they are preparing for the shift in sentiment that we are anticipating. So just to wrap it up in the short term, I guess I'll look at some of your questions here in a moment, but I do not feel the bottom is in at this point. We do need to be patient and watch for capitulation type action with huge volume behind it and an inability for shorts to get out of their positions. Because again, if you hit 4,000 and you pull back, what was it? A lot of percent, 5+% in 3 5-minute candlesticks, you're just inviting the bears saying, hey bears, we might have scared you a little bit on that candlestick, but feel free to exit your positions now in an orderly fashion. Whereas the bulls want to trap the bears and have it be like a burning building with everybody, trying to blow down the door and trampling each other, essentially, if that's not vivid enough imagery for you. So, what's up? Ask me some questions. I guess we can look at XLM. Let's do that just to stay consistent. XLM also had the bear break, a significant bear break on XLM because it's hitting all-time lows on certain exchanges with the break of 17.1. So we look at the weekly time frame for XLM, clear bear break. I was liking this equilibrium and tightening range, but as soon as we saw this bear break of 205, that weekly uptrend was lost and the bears assumed complete control. And now here we are down at all-time lows. So at least all-time lows on Bitfinex. Let's see where we are on some of these other exchanges. Kraken. So bulls in trouble is the bottom line. Very nice tight pattern with a clear bear break this week. I don't have a target for bottom. Again, it's just guesses at this point. And I'm not one to guess. It could easily be 3,500. It could be 2,500 for all I know. So I'm not going to try and guess how far the bears can push it down before we get that capitulation kind of move. I'm just going to take it one day at a time, as always. It can always get worse than you think it can. And there's going to be a lot of people left on the sideline. I want to talk about that as well. There's going to be a lot of people saying, I need to be very sure that the bottom is in at this point, and I'm going to be patient. And, the bulls have ruined my trust. And that's the kind of V-shaped recovery where by the time some of those bulls who are a little bit scorned by this space, by the time they decide, I need to get back in, we're going to already have bounced, 20% from the bottom, in my opinion. So there are going to be a lot of bulls that miss this move once the bottom does come. Again, I don't think this is the bottom just yet, but when it does come, I do believe a lot of people are going to miss it because they're going to be too cautious and too patient, and that bull move is going to come out of nowhere, and we're just going to see a complete 180 shift where we're going to say, wow, we haven't seen bulls like this in a long time, and it's going to come out of nowhere. Well, for us that are more experienced in terms of seeing climax and capitulation bottoms, it won't come out of nowhere because the kind of day where we see a 20% free fall and everybody says, what in the world is going on? And the next thing you know, you blink, and in 15 minutes, we bounce 10% off the bottom. That's when we're going to see capitulation, in my opinion. Bitcoin will never be worth zero unless something behind the technology breaks. There is always going to be somebody to pay something for Bitcoin for the rest of forever. BTG, so I keep looking. I keep looking knowing that BTG is likely seeing weakness, which we are, in correlation with everything else, but those longs are just not closing. So at this point, BTG has dropped 35% from its high just a few weeks ago, yet these longs are not closing. Longs are up at the highs. We did have that big spike on that big upper wick, but again, I have no idea what's up, but something is up. Only question is, what kind of event would worry me on the possibility of never going back to all-time highs and a failure to enter the financial world? It would be the U.S. government banning exchanges, the U.S. government doing everything it can to shut it down. I don't want to fight the U.S. government. It'll still survive, absolutely, but it will not thrive, no chance. So government regulation would be my biggest concern. Keep in mind, guys, that there are companies like Bakkt, like Fidelity, that are spending significant amounts of time and significant dollar amounts betting on the crypto space and betting on people wanting to trade this space. So we're watching a lower high on the 5-minute time frame for Bitcoin, 3,864. But again, I'm watching the 15-minute time frame for the most short-term clarity for me to try and find that higher low. Bulls are hoping that 37.73 is that higher low. Volume expecting it to trail off while we see a tightening range. And bull volume just hasn't been impressive really at any point. The way some of you guys talk in fact is just not true. You can't talk in fact. It makes you seem very inexperienced. If you say this is going to happen, it tells me that you haven't been in the market long, because the market is going to prove you wrong 100 times if you are certain about any event. I don't see a correlation between coins and weed stocks. The only correlation is the emotional sentiment, the emotional market, the euphoria, the fear. That's how they're similar. But in terms of following each other, in terms of price action, I do not believe that's significant. I did notice something that I haven't pointed out in a video yet, which is the correlation of SPY, the S&P 500, and Bitcoin was 2 days in a row. And I actually made this post in our chat room when I noticed it. And 2 minutes later, one of our members made the exact same post with the exact same observation on the same time frame, having not seen my post yet. So we both observed it at the same time. I'll try and go back and find it here. And of course, there's big gaps in the trading because we have markets closed while Bitcoin keeps trading. But look how correlated. I'm trying to think if this is what I'm trying to point out. But look how correlated these 15-minute time frames are with the SPY. SPY is in the background and Bitcoin's in the foreground here. And we had one day here where they were very significantly correlated. Another day here, they're pretty evenly correlated. And it's something that did catch my eye, and it is something that I'm going to be paying more and more attention to. Even here, once we started, these little bounce and then continuation, and then this hour-long, this 45-minute bounce and then fade. I'm seeing more correlation, which again, I watch SPY tick for tick on the 5-minute time frame all day, all the time. And I have not noticed correlation between the two in any significant way until last week. So I am starting to pay attention to it. We're seeing a lot of weakness in assets all around the world. The one place we're not seeing weakness is the dollar. And I read these posts on Reddit with people talking about the weak dollar. And the dollar is not weak. The dollar is at 16, 18-month highs. The dollar is the strongest that it has been since the crypto boom started in May 2017. So the dollar is not weak in any way, shape, or form. And to say so is just incorrect. And crypto needs weak dollar, wants weak dollar, and it's just not there. So again, we can't let our bias, cloud our our analysis of the situation. And at this point, the market's extremely weak. Gold's not really doing a whole lot. We've got cryptocurrency extremely weak. So everybody's looking for, when things are oil. Forgot to talk about oil. Oil has been just in free fall for 7 weeks. In my opinion, I would not be surprised to see oil, the stock market, and the cryptocurrency all see a fairly similar bounce in terms of timing. And that's something I'm going to keep an eye out for. And again, SPY doing this last week and showing me some of these correlations definitely grabbed my attention. I'm going to be watching it this coming week very closely, especially with all the action we've got now on Bitcoin. Oil is definitely killing the market. There is no doubt about that, in my opinion. And again, watch the commodities video that I put out over the weekend. Watch the market video, because this has happened before. February 2016, same thing happened between oil and the market, and the bottom was marked by both together. And again, I don't think cryptocurrency has a significant role in that relationship. I think SPY and oil has a very significant relationship. Don't think cryptocurrency has found its, place in that relationship. But again, it's something we're going to continue watching. And what's happened with Canadian MJ, a lesson that we can take from Canadian MJ is we have these smaller cap names, and when they list on the major exchanges, they list on NYSE, they list on NASDAQ, instantly their correlations with the overall S&P 500 strengthen. And that's because of bots and algos trading on those exchanges are linking them up. In my opinion, when Bakkt comes online, when Fidelity's trading platform comes online, we're going to see more correlations with mainstream financial instruments, whether it's the dollar, whether it's the market. I'm not sure yet, but I do believe correlations, because of these bots and because of the way that these large institutions do things, I do believe that we're going to see correlations pick up significantly, whether they're inverse or direct. Again, we'll have to wait and see. But the more mainstream we get and the more, institutional money gets involved and, high frequency traders and all that, that's when we see correlations pick up. That is correct. RSI is not much of an indicator with this sentiment. What I have been doing, or what I did do just recently with the 4-hour, was I did note that we had a solid uptrend on the 4-hour RSI for Bitcoin. So I drew this line as the dump was occurring and was watching for a bounce, and we bounced right above it. But it's still an uptrend on the RSI here, which is divergence. But again, I will never make a trade based on divergence alone. And I have significantly disregarded RSI levels, which used to be the backbone of my trading. If you've been watching these videos, we were making a pretty penny off of RSI levels January through April, we'll say. And that obviously has changed significantly. So that's just an example of ever-changing markets. If I was trading RSI the same way now that I was trading it January through April, I'd be broke. I'd have given back all of my profit. So we have to recognize changes in the market environment and adapt to them. And RSI will be a great indicator once again in the future, but at this point in time, it's not, because of the lack of support and the clear bear breaks. Shorts still climbing. But again, there's no rush, there's no panic. It's just slow trading right now. If the bulls can come out of nowhere and see a $200, $300 move and then hold that move, that puts on bearish pressure. But if that doesn't happen, bears are very comfortable. STL. It's not here on TradingView, so I'm not going to be able to chart that. Maybe through break of 3,000 psychological is going to be our climax bottom. Who knows? At this point, the daily chart has not really seen any kind of a bounce since, we'll call it, 5,600, very weak bounce attempt. So it's entirely possible that we see a short-term bounce, a bear flag, just a lower high before, weakness picks back up again. So there's nothing saying that, we have to hit the bottom anytime soon. This can draw out for another few weeks, We can see a couple day bounce, cool things off, see another bear drop. So there's all kinds of ways that this can play out, and we just have to ensure that none of those scenarios catch us by surprise. We have to prepare for any kind of those scenarios, and for me, I will be preparing by making sure that I do have cash lying around if we do see another leg down. Volume is definitely a good indicator right now. And again, the bulls are not proving anything for volume, but it will be noticeable when they do and when that does change. And we'll see climax volume capitulation because of that fact. So right now the volume, this dump did happen late in the day, so you have to take that with a grain of salt as well. That's a good point. So volume is affected by when candlesticks close, obviously. And because this dump occurred so late in the day, this dump occurred 3 hours ago, the daily candlestick, which just rolled over, only had that 3 hours of high bear volume. Whereas if the dump had occurred a dozen hours ago, there'd be way more volume by the time this candlestick closes. So always keep that in mind, which is why we zoom in for more details. And I look at the 4-hour volume compared to the previous dumps, because knowing that daily candlestick rolled over and it's kind of like cuts off, the volume in the middle of the move, that it's important to note when you should be zooming in to look for those more details. But when's the last time we've seen any solid 4-hour volume? And compared to the bear volume, it's just not there. But I do value volume more than RSI at this point, that's for sure. It's always staircase up and elevator down. That's just the way markets work. It's the way human psychology works. It is not time to go all in. GBTC is going to continue to fall apart. We're going to see a big gap down unless there's a huge recovery tomorrow. We're at all-time lows, so I take that back. We're not at all-time lows, but we're at the lows of this dump, obviously, and a gap down open is coming on Monday. $277 is the next support that we're going to be watching. I don't have any interest in GBTC until the weekly trend changes on Bitcoin. Then I'll start to pay attention and maybe put some of my stock market money in GBTC. But until that happens, I do not trust the bulls enough to do that and to swing, which is what you have to do essentially with GBTC. So at this point, for the next hour or two, I am anticipating sideways, low volume trading. We're going to battle the 15-minute exponential resistance. If we get over the 15-minute exponential resistance, we zoom out to the hourly. We watch the hourly exponential resistance. Again, we can always see another leg down. Until we have, huge volume, V-shaped recovery, 10% bounce off the lows, shorts panicking a bit to cover. Until that happens, we can always see another leg down. The long algos will kick in when the capitulation bottom happens, and it'll be those long algos kicking in that do lead to the trend change. And you can see it, when you get the bull move, this candlestick on Bitcoin, this occurs because it's not because of bull volume. I mean, look at this 5-minute volume on Bitcoin, where we went on Coinbase from $37.86, we went $214 in 5 minutes. This volume is very comparable to these other 5-minute candlesticks volume. And on those candlesticks, we only went less than $100. So why did we see this significant bull move up on just slightly more volume? And the reason is you can watch the order book, and the bears and their positions, they just pull them. And to get that kind of move up, it doesn't take a lot of volume because there's not a lot of resistance in terms of coins there, but they wait until the bulls make their move and then they just start dropping in the real orders. It's not like the bulls are buying, 100 market order positions on the way back up and eating up all of that bearish resistance. The bears are pulling those orders and then putting them back on once the bulls tire out a little bit. So it's a completely different scenario, and that's why we don't have the volume climax, because the bulls are not seeing market orders of huge positions eating up all of those bear bots. You think about just the bots that are sitting there with, let's say 1,000 Bitcoin, and they throw up a 100 Bitcoin wall to try and scare things, and then the bulls start to buy a little bit, and they just pull that wall, and they wait for the price to go up 200, and then they just throw that wall back up and then walk the price back down. And that's exactly what happened on this 15-minute time frame as the price dropped $200 from that initial bull move up. So until the bulls, again, it's all about trapping. You got to take the bears by surprise. You got to see huge market orders to eat up all of the coins that the bear bots are holding, and then put the pressure on the shorts. And we're just not seeing that. We can absolutely see more follow through tonight. I mean, we can make it back up to 4,000 on Coinbase, but in terms of confidence of capitulation bottom, it's just not here on this action. At this point, for shorts to be extremely high, I mean, we still need a few thousand to get added on here. All-time highs would be real nice for shorts. And I get more confident as a bull when I'm in a bullish position and I know how extreme and how much we've already pushed to the downside. I get more confident when I see the shorts are higher because I know they will have to cover. Long algo, just referring to bots that are buying, bullish bots that have bid support and walk the price up. I don't know if the dump is deliberately timed for Saturday night. Again, it's a global market. I often have to remind myself that it is not US based and that there is more dollar volume on other exchanges out there. So no, I do believe it's probably intentionally timed with the end of the year. That wouldn't surprise me. And also probably intentionally timed to get the price as low as possible before the backed exchange opens up. Tips for controlling emotions when trading. You have to be able to control your emotions in regular life. You have to be able to be completely calm and take deep breaths and zoom out of situations and not have emotional reactions to anything in your life if you're going to be able to apply that to trading. So whether it's meditation or whatever you need to do to find that center of balance in regular life, if you can't do it in regular life, you're not going to be able to do it trading. So honestly, meditation practice and relaxation. Honestly, I think lucid dreaming and practicing that has helped me significantly in many different ways as a trader, not only with observation, honing in my observation skills, but relaxation, meditation, all of it. If you're down 90% in your portfolio, you count it as zero and you hold it. I do lucid dreaming. I have a video intro to lucid dreaming on the YouTube channel. You guys should watch it. Shaving definitely can help trading. Makes you more agile. No free course content. We'll do one in a week or so, but right now we're still running the sale. The Black Friday sale. If you are trying to take a very passive standpoint, it can be a point where you start accumulating. Anything under 4,000, I would, again, always want to have cash ready to go in case it gets worse than you think, because odds are it's going to get worse than you think. So if you start accumulating in the 3,000s, save some cash in case we break 3,000. But if you're looking longer term, again, you always want to have an exit plan, but considering where we came from and what the weekly chart has done on Bitcoin the last 2 weeks, risk to reward scaling into the 3,000s and the low 3,000s definitely favors reward in my opinion. I can't imagine the ETF is going to get approved. I think the market is clearly pricing it in that it's not going to get approved. When the instrument can drop 40% in 2 weeks, it's just not good for an ETF. I put log chart on for this most recent dump. I've been keeping it on standard most of the time, but I did want to compare to what log looks like as the percentage drop here is fairly significant. So I play with both, but normally I have log off. I had a mentor of sorts in the chat room. Not very well. He answered my questions, and he would, he would say things, and I wouldn't understand them, and that would guide me on where I, directed my research. So he was more of the kind of person to answer the questions I had, but also would point to where to do my further research. Most of it was, self-taught research, but he definitely played a significant factor with speeding up my learning curve. If you want to trade LTC instead of Bitcoin, you're going to have higher risk and higher reward. So the bounce on Litecoin, once the bottom is hit, is likely going to be more significant percentage-wise than it is on Bitcoin. I'm not interested in physical silver or gold. The fact that the bulls did not show up in those markets when the stock market just dropped 10% in a few weeks is very notable to me. At this point, I don't think we need any kind of FUD news release to hit capitulation. I mean, look at what the price just did today. There's no FUD there. We just dropped 15%. Just because the bears have clear control. So my play from here will be to watch for a 15-minute high or low, and I will exit a 15-minute equilibrium bear break and go back to all cash and watch for any kind of potential lower lows. And other than that, again, just doing everything I can to make sure that I have cash for when that capitulation move does happen. So I'm going to wrap it up. We're working on a course for more basic stuff. Candlestick shapes and the psychology. It's actually going to be really in-depth in that regard, probably a dozen hours long or so. But we've been working on that for a long time, so trying to get some more pounded out this weekend. And we'll come back on if we get another leg down, but I don't foresee that happening in the near term. It could happen later tonight. If this 15-minute equilibrium that's likely to happen breaks bearish, we'll be looking down at 3,600. Price labels on the chart, you go to indicators, pivots, high, low, and then change, let's see, that's not it, pivots, HL, I believe. And then change the settings from 10 to 5. length is 5. That makes them show up more frequently. Seeing a lot of questions asking about SPY, asking about gold. Again, I do those videos either every day or every weekend. So check out my commodities video if you're interested about gold or oil, and check out my markets video if you're interested in SPY. And stay protective out there. Again, it can always get worse than you think it can. We can flush under 3,000 within the next week. It can absolutely happen. Whether it's likely to happen or not is a different story, but it can absolutely happen. So I hope you all have a good rest of your Saturday night. And we'll keep an eye out for that capitulation, but we'll know it when we see it. Again, it's going to happen so fast that we're going to see just an absolute V-shaped bounce with a 10% move in minutes that does not get given back. We will not see big upper wicks. We will not see significant consolidation right after it. It'll just be a turnaround and significant run with bull flags. Those bull flags don't give the bears much time to cover when we have brief consolidation and then continuation. So thanks again, and we'll see you all tomorrow. We'll do some altcoins tomorrow.